Hi friends, I'm Rocky Outcrop and I'm super excited to bring you this brilliant technical analysis episode today. So much so that I'm going to actually introduce it with some background music. How about this? So, I'm Rocky Outcrop. Welcome to the show. Today we'll be taking a look at Bitcoin, Ethereum, Chainlink, and Tezos, all combined into the one episode. And if you want to, you can look at the previous episodes where I've done individual videos for each of those. But the advantage today is, of course, that we'll be able to look across the markets holistically. Such a big task, such a mammoth task. Maybe you need some help, Rocky, I hear you crying. Well, you're not wrong, because we're joined by a special guest today. That is right, it is the one and only Kim Jong Un from North Korea. Everybody, give him a big round of applause. Round of applause here. Yes, clap, clap, says Kim. Just give everybody a nice wave. Wave over there. Wave for Kim. Hello, Kim. Thanks so much for joining us today. And that is why I have this face mask with me. You might be wondering how I can have a special guest on the show and not contract coronavirus. Well, this collaboration is brought to you with face masks. As you can see, every time Kim speaks, I'll cover up my own face and that will protect me from the corona. Kim, you don't need to do that yourself because as we know very well, you are not Kim Jong-il. That was your father. You are Kim Jong-un, the un and only. That's enough of that. That's enough of that background music. Okay, so Kim, you are a leader. You are not only a leader, but you are the supreme leader. Why don't you give us a little bit of background about yourself and what got you into crypto? And then maybe you could even take us off with the Bitcoin technical analysis after that. Okay, yeah. Well, thanks very much, Rocky, for bringing me onto the show. Wow, that's some good English you got there, Kim. How come? Why don't you explain to our guests how you speak English so well? Well, as you know, Rocky, I went to university and school and stuff in the United Kingdom for that education, and that's where we became friends. And of course, we go way back, so that's why I've got the exact same accent as yourself, my good man. Okay, so anyway, like that's great, and you might be curious then when I say that I'm a supreme leader. What does supreme leader mean? Well, you're maybe used to leaders like Donald Trump or, or the Queen of England, and those people are just like your regular leaders. Leaders rhymes with cheeseburgers, and it is no coincidence. Now, like your regular leaders, they just generally have one slice of meat in them and an adequate amount of cheese to cover the burger, oftentimes with just a plain burger roll around it. Whereas, whereas I am the supreme cheeseburger leader of North Korea. And as you can see, that means you get an extra stack of meat. That salad is fresh and lovely. You get all the sauce that you could shake a stick at. And quite oftentimes you get cheese, maybe 2 burgers, maybe you get 5 of them on a plate with some waffle fries. Any way you like it, that's the way we'll have it, baby. So, okie dokie. And yes, I'm very glad to be invited onto the Rocky Outcrop channel. Just want to tell everybody to hit subscribe or I will put you in or I will give you something to subscribe about or whatever. Yes, thanks Kim, that's very nice of you. Of course, you know, everybody out there, if you want to subscribe to the channel for daily crypto technical analysis, then I would be absolutely overjoyed. So let's just take a look at the charts. Hey, I thought you said I would do the Bitcoin one. Chill out, Kim. You can join us again later. Just hold your horses there. Let's take a look at the Bitcoin price action. And like I say as well, in these episodes, I do chapters down below, so you can skip to whatever part of the episode actually interests you. But I would say that it's probably going to be the whole thing because this is the day that we take a look across the entire markets. Wednesday, of course, is the inaugural one of these episodes. But I will say that this is where, as we always do it, because it's always good fun to start off talking like we've done this many times before when this is the first time around. So that was our inaugural guest. That is our inaugural guest there, Kim. And of course, this is our inaugural midweek around the markets show. So Bitcoin. There we go. This is the start of the first chapter. And thank you so much for joining me if you skipped to this point. So what we have with the situation with the Bitcoinage is that the prices have been dropping down this whole time since we were looking back over here on the 1st of June, filling out what we have on the charts here in the blue as a falling wedge, which is a statistically more bullish pattern. They came down so far where we came to the bottom of the falling wedge pattern in around question marks about whether or not we'd be breaking out of the background sort of rising wedge pattern, if you like. And since then we've managed to actually stay within the background pattern and come all the way back up to the top of the fallen wedge. And now we're kind of looking at this bit where we're getting squeezed quite a bit. So I do expect that in the next wee while we'll have a little bit of volatility to kind of take us past this particular phase in the market, or indeed continue one of the phases and maybe sort of break or fake out of the other. So what's the context around this situation real quick? Let's just dive up to the 2-day chart, stretch it out a wee bitty and see that, of course, you could look at this as being like a descending triangle. Let's go down to the 4-hour time frame and stretch that out a wee bitty and see that, of course, you could be looking at this as having a sort of parallel channel in the background. Maybe it'd be easier to see just now on the 12-hour time frame there. So you could call it a parallel channel in the background, or indeed you could make the case for a symmetrical triangle quite easily over here in the CME charts. Let's go up to the 24-hour time frame where it fits in a little bit nicer. What do you make of that then so far, Kim, when it comes to the patterns? Thanks very much, Rocky. Yes, I think that's a very good point to be making to all of the people out there. That, of course, we have various different perspectives on looking at this, just like how there's different perspectives at looking at my leadership qualities as debated around the world by different people. Hey, Kim, no need to take this. You're going to have to take a time out for a second. We agreed beforehand. We talked about this. You wouldn't get political on it. We're just here for the banter and the technical analysis. That's it. Leave your fundamentals like politics outside the door. So let's just start off though here on the 24-hour time frame looking at the CME chart. Bear in mind that we had a gap. Well, actually, go down to the 1-hour time frame just to kind of show this off. We did talk about how there was a gap there on the charts the other day. I put a little ray in here. Obviously, that got filled out again, and prices have been kind of jumping around in this area. But what we do, so that was just over here on the 10th of July. For those of you who are interested. But of course, we're looking at the bigger picture really at the minute and kind of considering, this sort of little zone that the prices have been in. And we had this marked on because of the old gap box type chat. Now we use on a Friday, we come in here and we mark off where the tops and the bottoms are of price action so that we can look out for this coming up for the following Monday, whether or not there would be a gap. And we had this one drawn in kind of like this. And I'm not 100% sure now that I'm looking at it. Yeah. So it was this candle here. And that was showing us where, the range was potentially for over the weekend and then coming up to the start of the next week. And we actually find that the prices have been kind of sticking around at the top of that area where there is that doji. Doji being Japanese for... Hey, hold on a second. Don't you say Japanese. I know the answer to this one. We don't need to ask a Japanese person. The doji means mistake in Japanese. Okay, well done, Kim. Thanks for your contribution there. Yeah, so we had this mistake candle over here on Friday, followed up by another sort of mistake candle on the Monday, and the price action's just been kind of bandying around between these two areas, the 9,300s or so down towards the 9,150 area or so in terms of the range here on this one. And what does that mean so far? Well, actually, we've kind of been kicking about between the 21, which is this yellow smooth line in the background, 21 moving average, and the 55 moving average. The 21 being above the 55 over the next wee while. Let's look towards those two in terms of this chart, in terms of this time frame, for whether or not we're kind of staying above and keeping on with the current trend, or if we're actually going to keep below the 21 and stay on that current trend, which is when the prices are below the 21, that's kind of one aspect. When the price is above the 55, that's another one. So that's a little bit of sort of for the broader looking type of folk out there in the world. Let's go back over to the whatever this is, Coinbase, right? Yeah, the Coinbase chart to check in with what else we've got on the go in terms of just like going down the time frames now. Let's just, well, actually, I suppose we can wrap things up on the 24-hour time frame. Just point out, like, Bottom of the patterns to you, so we're down here towards the bottom of this pattern here. Will we break through it? We're actually at the Bollinger baseline as well. If we go below that, could we be looking down the way? And if we did, then where would that bring us? Well, we've got these two chopsticks just in here. I love chopsticks. Where, to be honest, I love chopsticks, but the problem with chopsticks is that, for me, is that I primarily eat cake, of course, and I don't eat cake with a chopstick. I just eat it with my hands, basically, and pick it up and just. Anyway, Kim, let's focus on the technical analysis, Kim. So yeah, down here where these chopsticks are, you could have you've got the golden pockets zone as well. So if the prices were to move down below the baseline on the Bollinger Bands here, and then move down towards the lower line of the two standard deviations away from the 20 down here, then you'd be looking at coming into the $9,000 area where we have our chopsticks at. So that would be kind of obviously quite significant. Around those zones, what you're really looking for as well, if you were to move down here, it would be the 236 in there at 889. This is, of course, on a Fibonacci drawn in from the lows on March the 13th up to the highs on June the 1st. And of course, the 886 over here in this other Fibonacci, which was drawn in from the highs of the June the 22nd down to the lows of the June the 27th there. And is that right? Did I actually say that right? Have I done that? Have I drawn that in the right way round? I could totally confuse myself now. No, sorry. That was drawn in from the lows of the 27th of June up to the highs of the 9th of July. Kind of confused myself there for a second. It's because I'm distracted by having a special guest on the show. Sorry about that, Rocky. It's okay, Kim. Don't worry about it. Me and him are tight. It doesn't matter. So yeah, looking down towards this lower area, you'd have the 886 of this, and that's Fibonacci's drawn in from the 27th of June lows down there at that 8,800 area, up to the most recent highs, where it's the top of that fallen wedge area at the 9450s or so point. And what we've done so far in terms of that Fibonacci is we're living below the 236, which is coming right in at the top again of that. So if we did move up towards the top side, I would kind of put that 9350s area as being, significant. And looking at these two numbers here is our fake out sort of zone potential. If we were to get a fake and breakout from this move here, it would only become a real one instead of a fake one if we were to go above that 9,700 area, in my mind, pushing beyond the 50% on this Fibonacci retracement that we've got drawn in, which is in the background again there. So I know there's a lot of mess in the charts here, but of course, if you subscribe to the channel, then all of this has been broken down so many times for you that you won't get too confused. Let's just dive on down the time frame then, go into the 4-hour one like we wanted to do, and you can see that we're actually doing that at the minute in terms of the bolly wallies. And if we take off all the drawings, maybe make it a little bit clearer, you can see there's a huge confluence of moving averages in at this zone here. And we had the 50 in terms of the 4-hour time frame. Now we were talking about this as well a couple of days ago, or yesterday maybe even. We had this moving up. This it's the red dotted line here is the 50 simple, and we have the white dotted line moving down the way. Now, should these two have crossed, we would have had a sort of 4-hour time frame golden cross there between the 50 simple and 200 simple. They came in close, they kissed, they moved away from each other. When have we seen that happening before? Well, just over here, in fact, it came in close, kissed a bit smoochy woochy behind the bike sheds, and then of course they actually just moved away from each other. So we're still in that mode where we're asking questions here, and that's kind of partly where it comes down to the idea of, like, over the next wee while we'll be making up some mines. Some mines will be made, and some others will be broken by the price action. And of course, little things like if we had a crossover here on this time frame, that would be kind of good. The volume's been diminishing off again since it rose up, and it rose up a little bit in the recent past when we came back up to the top end of the bolly wallies and whatnot here in the 4 hours. But generally speaking, this is a diminishing volume sort of aspect over here, and just generally speaking, as we've had this compared to when we came up towards our highs here, just looking at the volume over here, much less than over here. This is on the way up. This is the consolidation post rise, and this has been going on for a wee while. There could obviously be some time left in it. Just a quick reminder for folk who don't get too carried away, because we need to do that on this channel. Some people get carried away. I know all about that, Rocky. Just let me interject here. People get carried away all the time. I go off camera for a couple of weeks. They say I'm dead. I test a rocket out. They say I'm a lunatic. What's going on? People get carried away all the time. Yeah, I know. It's awful, Kim. It's awful, but we can just do what we can do. So, yeah, just a reminder to folk that in terms of this symmetrical triangle, if you did have it drawn on something along those sorts of lines, then you kind of said, well, let's just call it, let's see, 100, 245 bars long, and you're looking for 75% of 245, which would bring you up to 5%, 245, 190 or so. Then we're not, we're not. Did I say 245? No, it's only 100 bars long. God, why did I get the math so wrong? Well, not the maths, but the reading so wrong. That would have made the maths easier. So it's 100 bars. So, we're about 50 odd bars into that. If you're looking for about 70 bars, you could be looking at this coming up here, doing this for another week or two, just inside this triangle, giving people a lot of the whole FOMO at either end of it. Talking about either end of it as well, just to put things into perspective, the top end, you're talking that 9,800. The bottom end, you're talking about that 9,000 area just at the minute in terms of the shape of that thing. Let's just kind of then go on with the show in terms of, let's just go down, because I know that people do get a wee bit sort of they like the technical analysis, which is FOMO free, greed free, bias free, and integrates really well with people's own technical analysis there, and doesn't step on anybody's toes. Leaves people somewhat out in the cold at sometimes, where they're like, please step on my toes, Rocky. Tell me what you think is going on, with it in a bit more detail and whatever else. So then let's just do a little bit of that here as we look, and we can say that there is this sort of head and shoulders concept living on the charts at the minute. And if we were to break down below that 9,195 area, and in terms of breaking down below it, I mean, actually opens and closes on at least the 4-hour time frame below it, but preferably a higher one. Below the 236 here in this Fibonacci retracement, which is it's dead hard to see. You'll just have to subscribe to the channel actually, so that you can see these things getting built up. I'll clean it all out soon. It looks so bad with the bullies on there. Let me just hide them for a second, and the moving averages, so we can talk about this with a little bit more clarity. So we could have this sort of head and shoulders type area, and we're going to call the neckline in this sort of golden pocketsy zone here. It's not a golden pocket at all, but I'm just saying that for the crack. Between 236 and the 50% on these two Fibonacci's is kind of breaking down below that area could spell movements on down to where we have the golden pockets is my precious, which is of course a 618 here, which makes a lot of sense. If we move that right now, we see the prices in at that 382. So if they were to go on down and continue to retrace, having come down below the 236, which is drawn in, using the head of the head and shoulders, and actually the head here of the inverted head and shoulders in the past to create that Fibonacci retracement, then you're looking at this 236 having been broken there. We went below that 350 area again. Shout out to the 350s, and then on down the way here. Then if we go down below that 9195 area, we could be looking down at 9150s quite easily. But then afterwards, you're looking towards the golden pockets area of that 9,000 and the 8,992. That's the sad reality of things. Things have been fairly bearish overall. Do we have anything positive to write home about? Well, the last divergences we had here was bearish divergence. Throughout this downward trend, we've had hidden bearish divergence. Pardon me. And looking here between the lows, there was bullish divergence here previously before we got this bearish divergence. All of them have just added up to this, to just kind of giving us the idea that really the market hasn't got a great deal of momentum going in one direction or the other, and it's fairly weak at the moment. I would actually look towards that 9350 area to say that we're actually breaking, we're breaking the up above the 236 at the same time as breaking the potential for a head and shoulders here. And then you could look towards those other areas, bearing in mind again that I said earlier on that 9350 would be the fake out territory from that. So Kim, do you want to give a wee summary to people who've been watching along, and then we'll go on to the next chapter of the video? Okay, so I know that people who watch Rocky's videos often find it difficult to string everything together into a coherent narrative summary for themselves at the end, so let me just do that for you just real quick for now. If price movement goes up beyond 9350, then what you're looking at is poking the heads above the parapet of this downward sloping falling wedge, and potentially going above a 236 Fibonacci retracement here on the charts, and undoing a head and shoulders pattern, which could then lead to movements out beyond this territory, but we'll consider it to be fake outs until we've gone at least above 9450 and the 9545 area, which can all be considered to be fake out territory if you're looking for a rising wedge measured move off the back of this thing, up towards where we could then look towards the reality of things, where we have our previous actual high really kind of compared to this one where the head was over there at the 9,700. So that's your top side targets and your risk management and everything else for you. Here's a measured move. I'll just do, Rocky, if you don't mind me just doing a quick measured move for the people. By all means, Kim. Here, if we stretch, sorry, I'll execute them later. No, Kim, calm down. Yeah, look at Toodle Pip, says Alexa. Cancel. Right. So yeah, then up here towards the if we had a measure move, if you're going to be all YouTube about it, then you'd be looking up towards 10,000, but that's unrealistic. And instead, you're really looking towards that 9,800 area, and then and that would bring us up towards the top end of that symmetrical triangle. But that's not the only story, Kim. Why don't you not tell people the unbiased version, because we know there's also a downside possibility. Okay, then I suppose let's do that. People do find it difficult to remember everything once you've just given one one sort of bias over another. Sure, so why not? Looking towards the downside, if we're going past 9195, then of course we have moved but down below the 236 over here, and we would need to find support at this 9145 area, because we're calling that zone the confirmation line of this head and shoulders. Moving on beyond that, then you could take a measured move, for instance, off the head and shoulders, going down to the neckline over here, sticking it down here at where the sort of neckline area is, and bringing it back up to where you would do if you're using the textbooks. And you could say that you'd be looking down to the golden pockets, is my precious area there towards the downside. Movements on beyond that would obviously be quite egregious, because we're looking already at going down towards the lowest side here of the symmetrical triangle, and you'd have to go back up towards the bigger time frame things and ask questions about, like, how we're coming in here versus the lower end of this rise and fallen wedge, or indeed the 2-day descending triangle and that 236 there, 8889. Okay, Kim, you did a great job there. That's perfect. That's absolutely everything everybody needs to know about the Bitcoin price action. This bit's gone on for quite a while, but I hope it's been enjoyable for people. How about we move on now and take a look at Ethereum? No need to comment, Kim. It's okay. I know that you're right there with me. What are we looking at in terms of Ethereum? And by the way, I did take off the moving averages there and the Bollinger Bands there at the start of... Oh, this is the next chapter. Welcome to the next chapter. I'm Rocky Outcrop. Thanks for joining me for Ethereum Technical Analysis. We've got our pal Kim there. Hi, everyone. Who's joining me for the analysis? That is the one and only Kim Jong Un. Do not to be confused with Kim Jong Il. That's the name of his father. He's dead now. So, looking here at this, yes, we will put the Bollinger Bands and the moving averages back on in just a minute, but we're going to keep things nice and brief here for this one. Are we going to have some sort of Adam and Eve type top here on the go with this one, or something like that? Now, do I like the sound of that? Not really. There's a few reasons for that. The prior trend being towards the top side in this shape here, then being underneath, and that's not how these things work. They would normally be reversal patterns rather than continuation patterns. Then what else would you be looking at on this time frame, Rocky? Well, you're looking at this here and seeing the lower area here and these two sort of shoulders. You couldn't call that really a head and shoulders. If we jump down from the 2-day to the 24-hour time frame, you can see that that remains the case, that this is actually lower than this one, while we have higher highs in here. I'd be more tempted to call this more of a descending broadening wedge overall, which of course is a continuation pattern that maybe we were looking for if you wanted that. But at the same time, I'd be very, very cautious. Why is that, Rocky? Well, because actually we used to have this on the charts here with a descending triangle format, and the line came down here. If you want to call it some sort of thing, like how about we go for a Bulkowski bump and run pattern here, and say that we bumped up here, and we're running now or whatever. There was this area that's drawn in badly, but who cares, because I don't even want it on there. We're looking to see, this is the key area of support at that 938 or $238 area, of course. So if we can stay above that, then we're doing pretty well. But then towards the top side at 248, then of course that's where you're trading between them and whatever else, that's between these two areas. So keep it between that if you're looking to consolidate. Move down below this area if you're looking to go on to the full range. What's the full range? Full range at the minute that we're looking at, really, in terms of the actual support and resistance, it's got to be that 252 area for the long wave. 252. Shout out to everybody from Dublin out there in the world who listened to that radio station in like the 90s. And then down here towards the lower side, you've got 230. 230, you see? 230, you say, Rocky? Is that really it? Well, yes, because we're looking at the hey, are we faking out or breaking out zones beyond that? And I would actually kind of extend this rectangle down there, but I don't want to do that because I'm going to call that egregious. And hey, are we faking it or breaking out? That's the question that could be asked all the way till we make it down towards the lower end of our descending, broadening wedge. Descending, broadening. Is that structure there in the descending, broadening wedge exact, Rocky? No. We always talk about this, Kim, on the channel. Thanks. Good question, by the way, Kim. We always talk about this on the channel about how these things are subjective, and that actually, I tend to draw them in very sloppily just to reinforce that image for people in their heads. And in fact, we could be looking down here at this as having been just where I moved it up to there now as being a maybe a wee bit more of a realistic position for that one. Maybe the angle's actually slightly wrong as well. There's various different considerations to be had. Well, what can we use to turn that from a regular cheeseburger into a supreme cheeseburger? Then our illustrious leader, Rocky. You flatter me, Kim. Well, the thing is that you'd be looking here at the 236 moving at Fibonacci here, with this line coming in at $215 or so. Is there anything else that we could add to the charts to make it so that we've got more information for this right now? Yeah, Kim, no bother. I'll sort you right out with that right now. How about we first off, we stick on the Bollinger Bands and just acknowledge the fact that they're down here, the lower end at that 218 level. And if this Fibonacci retracement was drawn in body to body rather than wick to wick, that the 236 would be coming in at 217. And that's a bit of confluence that you have around about that zone, shall we call it, in this, hey, are we faking out or breaking out zone? Just to put things into context so that everybody knows where they stand at any given time with the price action. Of course, the median line on this bad boy comes in there at 234. I often hear that you say that that's quite similar to the 21 moving average. Well, yes, you're right, Kim. It is quite similar to the 21 moving average in the sense that they're one of them's 20 periods and the other's 21. But of course, this is a simple moving average and the 21 is exponential. But they do often come in very similar places to each other. You'll actually find that the 21 is in there lending us a degree of confluence with that where it was line on that one. So, it doesn't take a great deal of movements to either side to really kind of draw out a new picture. How does that kind of correlate with what we've looked at in terms of the other big boy in the market, the other supreme cheeseburger? Kim, why do you not explain that for people just ever so slightly? Well, I think what Rocky's getting at there is that if the markets were to move up beyond these ranges that he's pointed out here in the sort of in the medium term time frame on either of them, that you could maybe take that as an advanced warning, canary in the coal mine sign that something's kind of gone slightly differently in terms of the market, and that could be a degree of the enthusiasm or the or the momentum or the increase in monies. And there's other things that you could do at the time as well if you wanted to, like look at the open interest and stuff like that. If you want, okay, Kim, back off there. We have to keep things accessible for people and not be too complicated with things. Well, why do you not just take a quick look at the lower time frames and then dive over to the Bitcoin dominance chart before we take a look at Link and Tezos then, Rocky? Okay, great idea, Kim. Nice one. How about we give him another round of applause for that one? Okay, good. Yes, good. Clap, clap, clap. Great. So yeah. Right, great. So yeah, okay, that's a good idea. Let's do it. Let's go down to the 4 hours time frame. You're keeping me on my toes here, Kim. What do we have here? Could this potentially be some sort of Adam and Eve type thing as well? Well, we don't really care overall. What we're really kind of pointing out the fact is that there's a significant support line. This does come down towards the bottom end of where the Bollinger Bands are. So what we like to talk about in the show, as we have done so often, is you look to see these things and whether or not they're going to trace one of the outer edges of it. And in terms of this lower time frame, then I'd be looking to see in the interaction around about this zone at the sort of 236 area where the Bollinger Band comes in at. If we were to trace that towards the downside, perhaps then, and look towards maybe coming in to touch it on one of the bigger, broader time frames and get a bit of movement down there, in which case we could change the shape of it and the direction of it. Of course, when you talk about the shape of the Bollinger Bands, really you're just talking about the shape of the actual moving average. And at the minute, the 20 moving average has got a slope towards the top side on the 12-hour time frame, and on the 4-hour time frame, it's sideways. And on the 24-hour time frame, you can see that it's kind of sloping towards the top side as well. And the prices are above it. So there's plenty of room for this to kind of come down and test towards the median line whilst kicking in at the bottom parts of the other parts in the Bollinger Bands as well there. And what do we have in terms of divergence? Nothing to be looked at there. There's a potential for head and shoulders in the stochastics. Let's just borrow these markers from a different time when we looked at this and say there's a potential for that. So just so people know that pattern there that we're talking about, then go down to the 1 hour time frame and see how things have been going. We've got a bit of, is this lower or not? It looks like it's not lower, whereas that's lower. Is that lower or not? Let me hide all the drawings here for a second, stretch it up a bit. It's not lower, but it is lower over here. So that's some. I mean, this is just pure sideways though, so we're not going to just go. This is just sideways. If you were looking at this as being a trend and looking towards the top side of it, sure, it wasn't divergent really overall with this upward movement. We had this volatility, wicks going crazy over here. If you're looking at this as being sort of now starting off a downward trend, then you could look between these two lows and say that they were bullishly divergent, which led towards this upward side here, which came in overall. But actually, this just boils up to looking like a head and shoulders here in the 1 hour time frame, which would give you which means that it gives you a couple of things to look at. If we were to move down towards its neckline, then where does that take us down to? Well, it takes us down to that 230 zone. And if we were to go up above, of course, that's another one of these. It's too much to say that. But if we were to go up above this sort of thing and actually have a failed pattern rather than a confirmed one, which is just as important, we could be looking towards the top end there at those higher 240s areas. Bearing in mind that nothing's really changed until we go up above the 250s areas or so. Do you think that really covers everything for now? Yeah, cool. Cheers, Kim. Thanks for the vote of confidence. Let's take a look at the Bitcoin dominance chart as well then on this one. I hate the volume on this thing because it doesn't mean anything. So just hide that real quick. And I think that charting on this is a bit silly in a sense as well, but you can see that it does stuff. Look at the Bollinger Bands here. Look how it's traced the Bollinger Bands. If you've been hearing me talk about the Bollinger Bands a whole lot recently, I hope it's finally settled in the way that you would use these things rather than looking towards kind of the textbook for morons. Hey, I wrote that book. Sorry, Kim. Sorry, Kim's amazing, most supreme textbook ever. That's for absolute technical analysis geniuses. Then you're reading that, then you might get a little bit of the old misinformation. I love misinformation. Yeah, we know you do. And you might see that happen. You might see it say something like, "Oh, it goes towards this edge. It means that the most likely thing is it'll go back towards the baseline, then towards the top end. It'll just go between them." Blah blah blah. Well, you do see an element of that happening during the sort of the sideways markets here, where you kind of go towards these things and it kind of discovers where it wants to be, as there's a degree of agreement in the price is about where they could be overall. But actually here, that's actually disagreement. An equal enough people saying that they think it should go one way compared to the other. Whenever there's this agreement in the prices where at one time, the sort of the bulls are like no way, and the bears are like yeah, of course as well, and they all in concordance with each other. Then you see it sliding down, and you actually look towards it, tracing the edges of that. I hope that people are finally getting that because nobody really talks about it. It's the way you use these things. I should make a course on that alone. I'm sure it's worth loads of money. By the way, throw over to Kim. Yes, Kim here. I would just like to say that if you're getting a lot of value from this episode and you find it enjoyable, make sure you hit that subscribe button and share it with your friends, especially the North Korean ones, because a lot of them are over there are worried that I'm not so well at the minute. And of course, I am Kim Jong Un and only, not Kim Jong Il. Don't confuse me. So great. So the dominance here, we're looking at, they've come down to 63 point. I hate this thing. There's hardly any point in looking at this. Look, we've come down to we're on way too low a time frame. Go towards the 2-day time frame instead and say, like, at some point here, we could expect potentially for a turnaround like we saw over here, and you could potentially see a retracement in the alts. So we can look towards that at the minute. But we've had some really, really strong alts leading the way, picking up the rest of the market overall. In general, this is quite bearish looking. There's nothing good to be said about it. I hate looking at oscillators in terms of this thing as well because it doesn't really make much sense. But overall, it's all bearish. It's not. There's none. There's maybe the slightest bit of bullish doubt. No, there's whatever. You could maybe make a case for it, but there's not really. It's all crap. The Bitcoin dominance thing, it's pretty much a waste of time looking at this chart in general for people. Just a little lesson for you there. It's sliding towards the downside. Whether or not this is a case of new money coming into the market or the money separating between the different assets, I think it's fairly clear to see anyway when Bitcoin's been going sideways for so long and looking overall kind of weak and bearish in overall let's be honest. That it's got the Bitcoin dominance has dropped down as the alts have gone up. Not a great deal of people putting in a great deal of additional money to the market. It would probably be worth looking at the open interest. I'll leave that with you though, and we can move past. Oh, we do want to look at Ethereum versus Bitcoin. Not really cool. Okay, cool. Well, thanks very much for letting me know you didn't really want to look at that. That's good. We can just continue on. And this is chapter 3, then, I suppose, in a sense, where we take a look at Link. Things will get a bit quicker in the episode now because, I'm sure I've gone on for way too long already. Definitely, this is far too long an episode. But let's look at this thing anyway. On the 2-day time frame, wowza, like this is just parabolic towards the upside. There's very, I just want to kind of throw out, I suppose, the two main aspects of trending markets. The trend is your friend until the end of the trend, and what you'll find the majority of successful traders do out there really at points like this is just kind of like move their stop up, and hope to stay in the market until such times as it's turned around and they've taken out a decent profit at one of the higher levels. So you could do it that way and make it really simple on yourself if you want to. But let's do it a little bit more complicated and look towards the 24-hour time frame and say for a few things. Now, for instance, first off, we have the speculative Fibonacci in here. This is kind of helping us to see where the levels would be should we drop back down again, where you'd have potentially your first shallowest retrace would come in there at 74,000 or so. And then if you wanted to move on beyond that, you could be looking down to where the median line of the baseline of the Bollinger Band's coming in at and the 382. Then if you're to move beyond that as well, you've got the next one here at 50%, where we see the 55 EMA, the 50 simple moving average, and this fuzzy line all kind of coming in and around about that area. The fuzzy line being a previous area that we've looked to in terms of support, where we had our highs, which was represented the top end of the ascending triangle we were in before we broke out there at 52,000. So you could always come in for a retrace down to retest that area, which would be incredibly significant price action towards the downside and a significant move towards the downside there. And I would say that in many aspects, that looking at this from the sort of all-time lows to high area in terms of the Fibonacci isn't supremely useful really at the minute when we could look towards the previous sort of swing low perhaps over here and go up to the highs and see where a 50% retrace of that move would be, and maybe that would give us a little bit more insight into the dynamics around certain price areas. So if we just take it from roughly around about there up to here, and then instead we can see the 236 coming in there at 82,000 or so as well. So perhaps maybe that could be where we would look to in the future. Re-entries on this thing are always going to come in at around about where the Bollinger Bands are, just in terms of the expectation being that snap to tomorrow and a new day opens up, it's going to be up here, and the Bollinger Band would trace up along with it. Of course, as you can see, this is definitely going towards the top side, so you could assume that the Bollinger Band would at the very least do something like that. And then you'd be looking at around the 90,000s for us to retrace back down tomorrow should we see price action actually close outside of that area today. So you could be looking for a small retrace in terms of re-upping, in terms of riding this trend, which is very much an upward trend at the minute on that one. I also kind of feel like then that we should then just revisit this concept with that swing low instead, take it from there, since that was like the last low instead. And then where's my other side of this? Sorry, people. Sorry for delays. Stick this in here instead and speculate off the back of that again. And yeah, well, it still adds up to more or less the same thing. So that's how I would do that. I wouldn't be wanting to look towards like this one, but this again, I suppose, then is the ultimate low before we started making the move up. So if you wanted to try and look at this just to put a bit more context into things, then we see that this has at least got a wick touch in it in a way. So that's a kind of, or almost a had anyway. So that's interesting. What about if it's body to body on that one as well? So, and that would line up then, the 382 lining up with the 236 before. Yeah, so maybe you could look towards that. Anyway, all of that is kind of saying you're going to have to assess it in terms of the lower time frames and that, and look towards what's happening, because in the bigger time frame, the DMI and the RSI are not bearishly divergent. They're moving towards the top side. We've got the increase in volume that you want to see. The trend is your friend until the end of the trend. We can do other things, I suppose, as well, like just stick on a really small period moving average. Here, if I just edit my moving averages guy, let me stick the volume back on again, by the way. Is it back on? It is back on. It's hidden down here. I've moved the volume down there in a previous episode or something. Whoops, I didn't notice that until there now. No, I don't know why that happened. Now it's back up where it's supposed to be. Crazy. TradingView confuses me, and I do these live ad lib style recordings. It's confusing as. So anyway, what's that doing there? So what was I wanting to look at? Yeah, really small period moving average. Yeah, give me one of them. So let's do it with the red simple, and we'll call it. We'll just look at the 10 period moving average for now, or the 9. Let's look at the 9. Just it makes no difference. I mean, it makes a difference. Look at the difference it makes. Woo! Both of them coming in at the 236 there, if we wanted to look at a 7 period, as I would prefer to look at on the exponential one, don't ask me why. Then it's coming in at the 382 over here. All of that just says to me that really we just need to look at this in the lower term time frames, and just kind of make an assessment. The big term time frames are saying to us what we already know, and that the trend is your friend. In terms of the weekly time frame, I would look towards the 70,000s area, the 80,000 area, and that next week I could see this coming in here quite easily up towards the mid 80,000s. And I would expect, in terms of the weekly candles, should this close out over the period of the next wee while, just so that you can be aware that we've got some upward movement here, and that you could easily have a candle come in here, turn it to be like a big green body candle like this, and have a wick that comes down to the moving averages there, or to the to the Bollinger Band type thing there as well, and you could be looking towards that 83,000 level. Again, going down towards the 4-hour time frame, do we see any divergences coming in now? It looks like it, so we've got some divergences there. We're still we're being resisted by the Bollinger Band towards the top side now. Over the period of the next wee while, going to have to see if this initiates tracing towards the top side, if it moves towards the downside. We can look towards the this really low period moving average here to say how we're sticking above it or not, just for early signs for whether or not we would trace down away afterwards. You can see the volumes diminishing there as well, but you kind of, in the face of all-time highs, when supply's dropping off and there isn't anybody selling it, you can absolutely have increases in the price when the volume is just not there simply, and that's what's causing it to go up. So be cautious about that. By the way, everything exactly the same applies over here in the dollar prices, but I suppose you probably want to know like the numbers and stuff, which makes things a little bit more complicated because you have to move things around to take a look at the numbers. If I start off on the weekly instead, actually, and just take a quick look, and I'll move this up towards there as well. Where's the Bollinger Band coming in at? $7.20. We're $8.17 at the minute. So you could see a significant pullback in the prices. I think in terms of the Fibonacci's, this one here drawn in, it's like kind of no arguments that you'd put it in the bottom of it there, and you wouldn't want to debate that. Let me just. So yeah, so you've got it lined up with the wicks. You might not be able to see that on your screen, but it's lined up with the wicks there and lined up with the wick there. So you'd be looking here towards that $7.30 area. Now, of course, this would move on by the period of next week. Plenty of times left. This could change in various different dynamics. So keep an eye out for that, and see if we have a retrace back down towards these areas. That would be an excellent area to get in at, and not financial advice. None of this financial advice. None of this entire episode is financial advice. That would be an excellent area to get in at should you see that happening as well. But in terms like then looking down towards the low time frames, we're doing it without the bearish divergence, like we said on the 24-hour one. And then if we go down towards the lower time frames, we start to see that bearish divergence coming in as well. So you can look down towards those areas to see would we be doing it. If we go down below this 10 simple, is it 10 to leave on 10 or 9? Who cares? That simple small moving average there, then you're looking at it dropping down below down if it goes down below sort of $8.10. So which is a significant sort of 7-8% move down the way at the minute. Then of course you could be looking at it going on down the rest of the way, and that could cause a little bit of a cascade. So I'd watch out for that. But really, like I say so many times, if you're looking for that 15% downward move, you could get one. You could, but you'd be trading against the trend. Okay, that would be counter trend trading, and you are you'd have to be really relying on this bearish divergence playing out. And it could. Because the trend is your friend until the end of the trend, and these things are what we're looking to see early identifications if we are having the trend end. You can see the Bolly bands, for instance, coming in there at that 750 area and at $8.10 area on the 1-hour time frame. So if you wanted to use those techniques to try and figure out your placement for your footholds on the way, then you could. And we could also just see with the 21 EMA on the early time frames at 817 on the 4-hour time frame. It's right in there at the 750 area as well. Those sorts of things you could look to, I suppose. I'm not sure how helpful I can really be at the minute in that sense, because we're just kind of looking towards looking up the way. at the minute. Maybe I'll take another look at things from a broader perspective, or go back and use a different chart where it's been traded for longer or whatever else and stuff like that. I don't really know, but whatever. Let's move on to Tezos. So Tezos. Let me delete that. What shall I start the chapter after I finish deleting just here? Yeah, okay. So why don't you take it away, Kim? So, hi everybody, welcome to chapter 4 of the video. My name is Kim Jong Il. No, I'm not ill. I'm not ill. I'm not ill. I'm Kim Jong Un, the un and only. And you can, and I'm here joined with my friend Rocky Outcrop doing technical analysis here. Just give you a wave. Hold on, let me just give you a wave. I need to go over to OBS to give a wave here from me, Kim Jong Un. Thanks so much for joining us, and yeah, we're going to take a look at Tezos now. Thank you so much. Okay, well, cheers for the introduction, Kim. Right, cool, excellent. Let's take a look at the charts. We have the 4-hour chart up behind me at the minute. As you can see, the highs that we've had here have been up there at 3,400 again. Certainly doing everything that we want it to do. It's staying above the 236 Fibonacci retracement point here at that 31,000 or 31,900 or 3,190. I think it's 31,900. By the way, you know, freaking 4 months into doing these videos, asking every so often if somebody will give me a confirmation which one it is. Nobody ever has, but I'm pretty sure that it's actually, you know, 30, that this is missing a zero off the end, and that we're looking at however many satoshis. Who cares? Nobody cares. That's the truth. Looking up towards the top end there, then we're up at the top of the Bollinger Band, but you can see that we're inside it, you know? We're inside it. We're not tracing along. We want to ask questions about how the next few hours pan out. If this retraces back down the way, we look towards these small-term moving averages and the 21 EMA and the 236 all coming in around about that area of the 3,100 or the 31,000 area for that one, just to kind of see if we would to be retracing back down the way. If we look up towards the higher time frames, you can see that on the 24-hour time frame, we're tracing up the top way what we want to see on the Bollinger Bands. But of course, you know, you could easily anticipate a retracement back down into this golden pockets is my precious zone here, the 618 and the 61 and the 65 on the Fibonacci retracement zone here, just here at this area at that 33,000, of course, as well down to 32,000 area if we were to retrace back down over the period of the next 24 hours to retest or retouch this Bollinger Band. Otherwise, we could start to sort of extend about too much out of there and be living beyond it. Of course, we can live beyond our means in terms of crypto. We all know that, but you can be looking down towards these areas here for at least a sort of a revisit, you know, to check back in with mom and pop, get our laundry done, have a decent meal and whatever else, and then carry on with the expedition up to the northern regions. Anyway, overall bullish trend. That's very good. Bit of bearish divergence on here in the 4-hour time frame. Looking up at the 24-hour time frame, we've got this no divergence there. You know, in the minute, just like some might form in this overbought zone on the stochastics, but it's like just parabolic, and there's no point looking towards that. Likewise on the DMI, it's just no point looking towards that. So all we really can do in a sense is look down towards these lower areas and say how's the time frames on these lower time frames, how's the price action checking in amongst these things. As you can see, it's tracing along quite happily here, and we are moving beyond this zone. You know, the key area towards the top side has got to be that 3,415, 35,000 area. Zooming over to the left and checking in here with how this comes in at, you know, then after that you're looking towards the 36,000 area, where you can see we had this head and shoulders top area in the past before wrap on around this area here and in April. So that's what you'd be looking to if we move beyond those zones, you know. So everything's looking quite good, other than the fact that of course we're divergent off the back of this here. And you know, let's just have a look at the dollar pricing though in the meantime, and let's hide the Bollinger Band. Well, we can put the Bollinger Bands on screen. Yeah, Rocky, suggestion from Kim here, just put the Bollinger Bands on the screen for a second so that everybody can get a look at them. That's the 1 hour. This is the 4-hour coming up, touching it again. 12-hour here, touching it again. And 24-hour again. Same dynamics that we have on the go as well. And just before I pass back over to you, Rocky, I'll just point out that we have the lack of divergence in the 24-hour time frame. It's starting to come in on the 12-hour, but that's stupid to speculate like that. It wasn't divergent on the previous top here in the DMI or on the RSI, but it could have been potentially in the stochastics. Just a little touch of it here there. But that's a bit early warning sign, I suppose, perhaps potentially. But really, things are going along quite well. And on a 4-hour time frame, you can see that there is that divergence there coming in. If we were to close out here and no higher, and then form that as a local high, the prices would then be inclined to move back down towards the downside. But looking down here at the 1-hour time frame, you can quite clearly see that we don't have that divergence on the go, and we could be moving towards the top side. So yeah, thanks very much, Kim. You really did a good job of pointing out the dynamics of flow there on that one. So if we could, by the way, that's a little shout out to my one of my favorite TV shows of all time. If you're looking for a TV show to watch, Patriot on Amazon Prime. Fantastic. Anyway, we can look here at this. And say, if we see the prices actually manage to close out on the hourly time frames up above this Bollinger Band here and above the $3, then we'll have done something slightly different. Of course, we're all wanting the Tezos to be in the $3 club. We've all been waiting for that to happen, and it has come up here a few times over the last wee while, and it's retraced outside of the $3 area. I think it's quite clear to see then, if we bear in mind the actual number in terms of the price, when we look here in the 4-hour time frame, that if we were to come up here and then sink back down again and actually manage to maintain it above that area, we would have bearish divergence on the go, but maybe we're giving the oscillators a chance to reset before we're going up towards the top side. There's definite bearish divergence around here, but the $3 area is significant, so you'd need it to hold. Moving down beyond that, you can very easily revisit that 278, 279 area again, at the low 290s, if you're trading this thing, which you may well be doing because it's actually offered on trading platforms, quite a lot of them, such as evolve.markets, where you can trade these things with leverage quite easily as well, of course, alongside Binance and all the rest of it too. So then that's kind of what we're looking for on the 24-hour time frame. Then if we look in at where the Bollinger Band's coming in at, it's just that $3 area. So could we revisit again? Sure, absolutely we could, but then that kind of makes it a pivot point in the market. I think that's the key area to be looking to overall. So how about we kind of take a second then at this point to recap on a couple of things. Well, we see the volume going up here. That's very good. We've come back up above previous areas of resistance. Overall here, we're putting in, if this is an upward trend, which it isn't really quite yet, but if it was an upward trend, then this would be a low, this would be a high, or this would, and this would be a low then thereafter. So this high here is lower, could be lower. So we could, if we come in and set up higher highs, we could be doing it without the bearish divergence between these 2 points here. But there is a bearish divergence type thing here between this point. Really the question comes into, can we push the prices on past this area right here? And I think it's probably worth having a big smudgy woodgy line on here so that you can see it. Oh, I've got all these drawings too to look at. Forgot about them. Up there at the $3.30. You get up to $3.30, then I would expect profit taking, sure, in there. But I feel like the picture could have turned around a wee bit, and getting closes up there over the next day or two would be super delicious. And then to recap as well, we have this golden pockets is my precious zone in here, right underneath where the prices are, going between that $2.99, $3.07 zone here, just on this price action on the dollar pairing. And on the Bitcoin pairing, it's the same setup, where you're looking towards between the 3,200 and 3,300 area. Should the prices want to retrace at all down into those areas, that's where we'd want to see support at. Or else we could be looking down towards, the in terms of the 3,000 perhaps, or 3,100, 31,000, like we spoke about, or indeed down towards the 236 over here on this Fibonacci retracement at that 293 area. I want to see the prices sustain themselves above that. This is made for very good trading recently in terms of the percentage moves on this one. Up to there is a 10% move that we've had, 5% for the day in terms of where what the day's done, but 10% in terms of if you were just trading those wicks between those lows at 285 up to $3.12. That was a very good move, in fact, that one. And so then afterwards, the question really becomes about whether or not we'll be revisiting this $3 thing, how we handle it if we do, if we need to go down to that 236. If we do go beyond that, I'd be very cautious about things. I'd want in terms of this bullish upward movement for the 382 to offer support in around about that 10 simple moving average there. And how about we stick this back over to 50 to wrap up this show then, so we can see how the things are coming in terms of this. So the 50 simple moving average is at that 270 area. That's good to see. On the Bitcoin pricing, the 50 simple moving average right in there with the confluence of moving averages, 2,800. In terms of if you're like, oh no, the trend has ended and that, sure, you get ups and downs and trends, okay? And if this does turn out to be a high, overall, I'm going to just have to point towards that 2,800 area where the arrow was pointing at the start of the show, to say to people, look, that's what's going on. You might be interested as well, by the way, just now as we're coming towards the end of the show and I'm wrapping this up, to point out something else that's interesting that's going on. If I just hide Kim, give everyone a wave, Kim, wave. Just hide Kim for a second here. Hide me for a second here, and hide the Rocky Outcrop image. Is that one? Yeah, you can see that Trading Views updated today and added a new sort of thing onto the charts there, where it tells you the movement over the period of the last week and whatever else for these different coins. So let's just go through them real quick and take a look at that as we wrap up this show. You can see that we've had a 23% move towards the top side in terms of the last week. The last month, a 20% move to the top side, and that's been very, very good. Of course, that started happening around about the same time as somebody was complaining about how there's never any volatility and it never ever pumps, right? Just looking at the dynamic here. The reason they were saying that is because we had a 22% move to the top side over the period of the last 3 months, okay? Just to bring all of this into context. That's why they got frustrated, and this is what they've missed out on as a result of getting frustrated right there at that gap between the 3 month kind of this lows over here, whatever. They got frustrated and divested whoever it was from Tezos, and then it pumps, of course, 23% in a week. So, just to bear these things in mind, that sort of perspective might find it useful for people if you kind of think about what it means to constitute pumps and dumps. Let's look over at the king of the market currently. 1 week, 42% move towards the top side. 1 month, 86% move towards the top side. And 3 months, 133% move towards the top side. You got to sympathize with the person who said that Tezos doesn't ever pump when you look at these sorts of stats. In terms of the last 6 months, we did have a bit of shiggly booglies with the 90. So it was only a 96% increase to the top side, but the year to date pricing we've gone up 284%. So that's fantabulous in terms of that one. Of course, it's similar over here on the US dollar pairing, but over the period of the last 6 months, we actually had 128% rise and 131% over the last 3 months and 400% on the year to date. And a big reason for that, of course, is to do with the whole dynamic between the dollar and the Bitcoin pairing prices because of that whole thing with the Bitcoin run up. Now, looking at Bitcoin, week minus 0.5%, 1 month minus 0.5%, 3 months minus less than 1% move in 3 months, 6 months 16%, year to date 28%. You can really tell the difference here between how these things are going. When you look at the Bitcoin dominance, then of course it doesn't have those numbers on there, but it puts this thing into a little bit of context when you're looking at where the money is in the market. Looking at Ethereum, of course, as well. Give me my boxes. Where have they gone to? I'm not getting them. Ethereum versus USD. Not getting them there on that one, but against the Bitcoin pairing here. No, Ethereum versus... No, wait, look, we want this. Let's just look up another Ethereum chart. Maybe the Coinbase one's got it. Yeah, so where's Coinbase? Coinbase there, right? Stick on Coinbase. Has it got the boxes? Right, yes. Over a week, we've had a 0.5% loss. A month, a 2.2% gain. 3 months, 20% towards the top side. 6 months, 23% towards the top side. Year to date, 86% move towards the top side. You can see then over the last month or so that the money is moved out of the daddy coins, which is Bitcoin and Ethereum, yeah, and into these other coins here. So let's just take a quick brief look. You've got crazy stuff here in terms of 6 month moves, for instance, with VET, which is up 300%, or 3 month move 350%, for instance. Kyber, which doesn't have it, fine. Kyber USD doesn't have it. Kyber versus Ethereum, you can see it's moved up 600% in the period of a year. In the period of 3 months, it's up 100%. 0x token, well, 0x, which got a lot of people asking about it a lot of the time, it's actually not so brilliant, but it's still done well. 16% in 3 months, 52.8% in 6 months, 73.82% over the period of the year to date, but down 1.5% over the last week. Again, same with the dollar one. And then you've got other coins out there which aren't necessarily going to have the things, but you got Raven coin year to date down 30%. The 1 year down 30%. 22% down over the last 6 months. 3 months, we've got 7.6% down, up. 1 month, 2.73% up, and 1 week, 5% up. So we had some good moves in terms of these shit coins moving towards the top side and stuff like that recently. But of course, they've been shit investments from the very start, outset to where they are now. Year to date on iExec, or the last 6 months, they're almost the same, is 100%. The actual over the period of the last year has gone up 50%. So ones which are touted as being quite good by the likes of Chico Crypto out there back about a year ago performed really crap compared to a lot of the other coins if you just kind of chosen one at random. Now, though, if you want to see what a really, really, really amazing one looks like, you've got Band. It's up 1,000% on the year to date. That's no small part down to its really recent price surge. Over the last 3 months, it's gone up 130. Over the last month, it's gone up 97, and over the last week, it's gone up 50%. There's other coins out there that are like that. You can let me know if you find one out there that you find interesting, that you'd like to take a look at. And then you've got the sort of the schizophrenic type coins which don't really know what they're doing. Down 30% over from a year to date, up 13%. Over the last 6 months, it's up 35%. Over the last 3 months, up 36%. Over the last month, up 26%. Over the last week, down 2.8%. You know, you've got these sorts of coins as well. In general, what you have is some really strong altcoins leading the market. A few unknown dark horses flying up towards the top. A lot of coins kind of underperforming over the long period of time, and money moving away from Bitcoin and Ethereum into these other markets, and all of that. So yeah, cool. Let's just go back. I'll stick myself. Oh, I wasn't looking at it. I'll stick myself back on there. Should have been looking at that during the time because I was looking at the camera talking as if I was there. So yeah, great. Thanks so much for joining me and Kim. Hold on a second. So thanks so much for joining me and Kim. It's Cheerio for me and Kim. Let's just give everybody a round of applause for having made it through this whole episode. And if you want to hit that like and subscribe button, I would massively appreciate it. I'm Rocky Outcrop. This has been a whole lot of fun. Of course, I can't do this all the time, but this was kind of me thinking I want to try using this software, which would be for the live streaming, to test out and build up an episode here using that software as I sort of migrate towards doing live episodes. As you can tell, this is essentially as live. I think I'll release it as a premiere on YouTube because it's as live. It's all been ad-libbed the whole way through, and yeah, and we can enjoy this together as I join you in the chat. So if you've stayed through to here, no doubt it'll be completely empty in the live premiere thing. But if you've watched this whole thing and you've made it to this point in the video, then you're amazing. You're a special type of hero. Join me and Kim. Actually, it'll just be me. I don't think Kim will be making an appearance. I just wanted to bring Kim onto the show. In fact, go away, Kim. That's you. You can choose like Cheerio, Kim. Bye bye, Kim. Calm down, says Kim. Calm down, calm down. See, because recently there's been a lot of news about whether or not Kim is alive or dead, and Kim's like, calm down at the minute because people think he's dead. Well, he's not Kim Jong Il, he's Kim Jong the one and only. And yeah, so I just wanted to have him on the show just for a wee bit because you never know, our Supreme Cheeseburger might be back to greet us again on live television or something soon. And I thought it would be a bit of crack really to include him in the show. And I've enjoyed it anyway to an extent. And but it's been a bit of work. And I'll catch you in the next episode. If you do hit that subscribe button, you're a hero. The episode's lasted for like an hour. Yeah, okay. Well, that's what you get. It's been way more than an hour in terms of preparation for it, and it'll be another hour at least before it's up on the interwebs for you guys to see. I'm sure you guys and girls, but it's been really worth it. This doing the technical analysis on YouTube so far has been really worth it. Obviously not from a monetary point of view for me, but hopefully in terms of like building a community, finding like-minded people out there who like a laugh, and all the good stuff that goes along with this. There's way more to YouTube and doing this activity than there is in terms of like what you make from advertising or any of that sort of crap. Instead, I'm just wanting to help people, and when people come along and leave a comment saying that, oh, your technical analysis, I've learned more watching your channel in the last couple of months than I have done in courses I paid for and all this sort of stuff, it's really quite amazing. So join the Discord, let me know, and if you join the Discord, by the way, at some point in the future, I will release a course, and I'll be talking to people in the Discord probably about it. This is kind of tentative type, and just speculative plan. But if I release a course in the future, I'll be talking to people in Discord about it, getting feedback, from the community in terms of its value and pricing and everything else. In which case, pardon me, you could be a part of creating that. You could even feature on it. People could send me clips and stuff like that. We could build one together. We could do all sorts of things. But anyway, yes, wonderful stuff. Really appreciate you tuning in today. I'll catch you in the next episode. It's been a good laugh. It's been a little bit difficult, and but I've enjoyed it, and I hope that you have too. Okay, great. Thank you so much. I've been Rocky Outcrop. By the way, youtube.com/Rocky Outcrop to share this with your friends. And I was thinking about doing a competition actually. So that if you see a competition go up live saying like, follow this person on Twitter and all the rest of it in the next, before say the 20th, let's call it before the 20th of June, if July, if you're seeing that, and you're watching this video over the next few days, then I don't know if I'll be doing it or not. It might just be me testing the software, right? Or whatever. But I was thinking about doing that. I'm going to just kind of, I think, I'm a bit drained after this. So I'll certainly not be looking into that anymore until at least tomorrow. But, whatever. Great. Thanks for tuning in. Massively appreciate it. I'll see you next time.